Hello traders, welcome back. My name is Neville Hornsey, market analyst for YouTrading, and today I'll be taking a look at the dollar versus the yen. First thing I want to do is look at the Forex Heat Map on YouTrading.com. You can see that bottom left-hand corner is red, top right-hand corner is green, so it's moving into a risk off. Basically, everyone's selling the risky commodity assets and moving into the safe havens of the yen and the Swiss franc. The dollar is actually sort of mixed at the moment. So at times when the world's going completely to ruin, they can move into the into the dollar. But currently that's not happening across the board. So dollar is looking quite weak. If we go to the active trader platform, go to the dollar index, you can see that here we had a nice sort of rising trend. It's broken to the downside. And if I go to like a daily, actually maybe a weekly, the weekly sort of shows it clearest. So we had this big sell-off, then there's like a little relief rally, and then the sellers sort of overtook and overpowered the buyers. So we had this big crash down. This rally up has taken us up towards 96, didn't quite get to $97, but basically we're in the middle of these weekly candles, and you can see that where there were sellers before, there's still some sellers present. Going to the dollar yen. Now you can see we had this big sell-off as the dollar crashed and everyone moved into the safe haven of the yen. So over the Asia Pacific session, we had this big sell-off based on the COVID news. There's a new variant. The fear is that there'll be lockdowns and lack of economic activity. In the sort of London open candle, this hourly candle spiked down, didn't take out this low over here. So we've got this low. So we didn't take out that low. So it came into, the range of, so this was the lowest close. So there was obviously buyers there before. Some buyers were still present. They tried to defend this particular candle here from the 19th of November. Obviously rallied higher, but then the buyers ran out of steam. The sort of short sellers came back in. So short sellers came back in. Then the following hour, they stepped up, tried to get back into this green zone here, found resistance at the open of that candle. So at the London open. So the London open is actually acting as a resistance, which is there. And now I'm waiting to see if we can get, so this red candle here, this is where the sellers stepped in. Obviously, the next candle is an inside bar, so I'm waiting to see if not only can we get below this green low, which we've done, I want to see the actual sellers sort of continue and then get an aggressive break down to then target this low and this low. So this would be my first take profit area. My stop loss would go back above this red candle's high. So if we do sort of get stopped into this, so we've got a sell stop here, ready to go underneath this low. If that happens, then I'll be targeting to get to break even at this point. And then if I just go to a lower time frame. So like I said, the market was selling off during the Asia Pac session. So if I go to New York time, midnight, which is 6 a.m. on this chart, so it is there. This is another reference line I like to use. So midnight New York, the opening price today was up there at 114.728. If I put a Fibonacci retracement on, so from that level to the low before the London open, you can see in London open, they took it up to the 61.8, didn't quite get to the 76.4 retracement. So a big deep retrace. That's where the sellers sort of re-entered, if you like. And if I just move that aside and put a Fibonacci extension on, so from that level, from midnight New York to the low to the London sort of retrace. So for profit target 2 would be the measured move. So there, and profit target 3 would be there. So depending on, what happens into the price action, if we get to this low and then sort of see some buyers come in, maybe I'll get to break even a little bit earlier, but ideally it'd be at this level here, the 76.4 extension, then take some profits off the table here at the sort of measured move, and then finally close out at 161.8 extension at 112. So that's the sort of idea, trying to use momentum, in the market, trying to go with the sentiment and the fundamentals. Currently, the COVID's the one thing that the central banks cannot control. So everything relies on COVID being under control. And if this new variant is completely different to the other variants, and the vaccines don't work, then there'll be lockdowns, there'll be like a lack of economic activity, and there'll be a move into the yen a lot more. So rather than just taking a short right now, I want to sort of see that there's some sort of proof that these sellers are still actively looking to go lower, and I want to see a nice big aggressive breakout. So I get to the sort of profit target 1 quickly, so I can get risk free quite quickly, and then for that momentum to accelerate through the sort of stops that would be underneath this swing low here, and then this swing low over here. So hopefully that makes sense. Just trying to use momentum, trying to use price action, have a fundamental and sentimental reason for doing so, and then just on a lower time frame, trying to sort of manage my risk. All right, that's it for today. Hope you make some money. If you do, it's Friday. Don't give it all back before the weekend, and I'll see you next week.